Hey guys, I hate to interrupt, but I just wanted to take a moment to say if you're studying for the CPA exams and you like the visual learning approach that we take in this video, definitely check out Universal CPA Review's free trial. You can do this by going to www.universalcpareview.com, or you can click on the link in the description of this video. From there, you could take a sneak peek at Universal's platform, which includes animated video lectures, study guides, and practice questions with task-based simulations that come with video explanations that walk you through the solution step by step, kind of like having a tutor by your side. Okay, enough of that. Let's get back to it. Okay, so we've talked about taxable income items. We've talked about non-taxable income items. Now we're going to talk a little bit about partially taxable income items. Okay, so there are a few items that we're going to talk about that are partially taxable. So when I say partially taxable, what am I talking about? More specifically, this is generally going to be income that is taxable up to a certain amount. Okay, so starting with partially taxable fringe benefits, right? We said that fringe benefits is free stuff generally received by an employer. Okay, so life insurance coverage is a good example. So this is very different from life insurance proceeds. In this case, we're talking about life insurance premiums. Okay, so life insurance is a very good one to keep in mind when it comes to gross income. And the reason is because it's very easy to get tripped up on understanding the differences in the receipt of life insurance proceeds versus life insurance premiums. Life insurance premiums are a fringe benefit. So this is if your employer pays for your life insurance on, let's say, a monthly basis. Okay, so every month they're paying this policy for your life insurance because you're the employee. All right, so let's say that Planet of the Grapes is paying for Linda Larper's life insurance every single month. This is free stuff that is received by Linda, right? This is technically life insurance that she doesn't have to pay for. Is that free stuff going to be taxable to Linda? It's going to be partially taxable. So it is going to be non-taxable up to the first $50,000. Okay, so Planet of the Grapes pays for this life insurance policy on behalf of Linda every single month. She's getting free stuff, she's getting free stuff, she's getting free stuff. Boom, up to this point where they have now paid for $50,000 of free life insurance. So any dollar in excess of $50,000 will be fully taxable to Linda. Okay, so if Planet of the Grapes provided Linda with $65,000 in life insurance premiums while she worked at Planet of the Grapes, we would know that the first $50,000 would be non-taxable. Okay, so non-taxable up to the first $50,000, but the remaining $15,000 would be taxable to Linda. Right, they're paying for her coverage, boom. After they've hit $50,000, anything that Linda is receiving is going to be taxable when it comes to life insurance premiums. Okay, so this is different from life insurance proceeds. Life insurance proceeds would be the lump sum amount that is paid out upon the death of the policy owner. Okay, so if Linda died, the beneficiary of her life insurance would receive the proceeds. What we talked about is that that is always going to be non-taxable. We're talking about the free stuff, which is the partially taxable fringe benefit. Okay, so that's the premium. Okay, so next up we have dependent care assistance. So if Linda has a child that requires dependent care and Planet of the Grapes is going to give her a reimbursement or pay for that dependent care, that's technically a free benefit to Linda. Okay, so that is going to be excluded from gross income, but it's partially taxable. So anything in excess of $5,000 for this year is going to be a benefit paid that is taxable. Okay, so remember the $5,000 threshold. Snowballing off of that into the Employee Adoption Assistance Program. Let's say Linda's looking to adopt a child. If an employer is going to pay for the adoption assistance expenses, then that would also be partially taxable. Okay, so there is going to be this taxable income total expense limitation, and it is going to have this phase out for modified adjusted gross income. Okay, so keep that in mind as well. Let's take a quick break and catch our breath. Woo. If you like what you see in this video, well, you're not alone. Okay, many students who studied with Universal CPA Review have found a ton of success. And if you don't believe me, you could take a look at our reviews on Trustpilot. Trustpilot is the most legitimate third-party review site that ensures that our reviews are completely legitimate. Universal CPA Review is not only the best CPA exam study option for visual learners, but it's also the most cost-effective option out there. So if you've already spent thousands of dollars on another CPA review course, we totally understand, and we want to help you out. So take a look at our free 7-day trial and see if Universal CPA Review is for you. You can start your free trial by going to www.universalcpareview.com, or you could take a look at the link in the description of this video. So now we have education expenses that are paid by the employer. Okay, so this is different from what we talked about when we discussed qualified tuition reductions. Education expenses paid by the employer is a direct expense that is paid on behalf of the employee. Okay, so money is going straight to the employee for their educational expenses. Okay, this can also be used for student loan expenses that are getting paid back. Okay, so keep in mind that this is going to be free stuff to, let's say, Linda for going back to school, and it can be used for both undergraduate and graduate level education. And the limitation is going to be $5,250. Okay, so she can exclude up to $5,250 in education expenses paid by her employer as gross income. All right, so if she's going back to college to get a master's degree in wine tasting and Planet of the Grapes is paying for it, that's free stuff to Linda. She can only not pay tax on $5,250 paid on her behalf. Anything in excess is going to be taxed to Linda. Okay, so let's talk about some qualified employee discounts. Who doesn't love a good discount? Linda gets to purchase free merchandise at Planet of the Grapes gift shop at a discount. No Uber-specific limitations to this one. Just for the record, this is going to be limited to the employer's gross profit percentage, but again, don't worry too much about what that means. Just know that merchandise discounts are partially taxable, and same goes for service discounts, right? This is limited to 20% of the fair market value of the services. Okay, so if Linda receives a service from her employer, maybe it's legal services or accounting services, that's an economic benefit to Linda, right? That's going to be limited to 20% of the fair market value. Anything in excess of that discount would be income. How about employer parking? Okay, so this is going to be limited to this amount for the current year. Anything in excess of this for that parking pass is going to be taxable income to Linda. Same goes for transit passes. Okay, so shout out to my fellow New Yorkers. If you get a Metro card, this is also going to be potentially taxable. So anything in excess of this amount would be included. All expenses up to this amount would be excluded. Keep in mind that these are per month amounts. Okay, so that goes for both employer provided parking as well as transit passes. And finally, flexible spending arrangements, FSA plans. This is going to be the potential for an employee to receive a pre-tax reimbursement on certain expenses. Okay, so no need to get too lost in the weeds on this one. Just know that this is a fringe benefit.